Vincenzo's Gold Crypto Investing this September the 29th, 2025. If you can believe this, we're already approaching the end of September, going into the second month of autumn, even though it feels like summertime in the great state of Michigan. And you can see as we continue to build on Asset Millionaire, you can see the gold bullion. Spot price of gold is up nearly 2% or $71 an ounce. It's up to $3,830 an ounce. That's spot price. Gold futures are up $51, up to $3,861. Silver futures is up 1.16%, up to $47. And silver bullion, spot price, that's right, silver bullion, spot price is up to $47. It is now just $3 away from our target. That's right. You ask my credentials on becoming an asset millionaire, have my opinions wavered, how I invest, what are my reasonings and fact base for investing. And you can see I've recently put on, and I went over this last week, some of the things that have manipulated the silver bullion price throughout the years. The Hunt brothers buy up to create a long squeeze or a short squeeze to get out all the short people. And then there was a 944 silver pump. Then JP Morgan, a large banks, bought paper contracts to short the price of silver bullion after the Hunt brothers pumped it up, right? And we made that call with all that on there. We got this beautiful chart. I made it all for you, my audience. And we came on air right here. This was what everybody got scared about during the COVID dump in the silver bullion, right? We made the video right there when we made the call in that blue circle in April and May of 2020. The price was about $16 to $17. We went on to show you this massive cup and handle, right? And one of them goes back from the 1970s all the way to 2011 is the cup, right? On the massive cup, there's two cups. This is the massive cup. And you go from the top of the double top to the bottom of the cup to the point of a breakout. And that's what gets you $746. That's for a few years from now. But in the short term, we were identifying this when we made, and we were going off of this in the short term, the first target right here. You can see we got another smaller cup, right? It's still over a 10-year span, but the other one's a 3-decade-long cup. This one's only a decade, right? You see it? And then we're about to form the cup. We're about to hit the all-time high and tie it, which it hit in 1980, and it hit in 2011, right around $48, $50, right? I think in 1980, what did it hit? It hit 47. But this is on the, I would have to go to the daily time frame close. These are just the daily closes, not the intraday highs. We're up near $50. We're just below it right now. You can see we hit on the close, we were at $49.84 in 2011. We're sitting at 47 and change right now. There could be, when you hit this now, here's what I'm not sure what's going to happen. Gold, when it hit it, had a 1.5 year long handle right there that formed a consolidation. But since this is technically the handle off the 3-decade-long cup, but it's a smaller cup within it, there's breaking out of the handle. Now we're just retesting, which I think is happening. Oops. We're just retesting the COVID low, right? Come on. We're retesting. Oh my God. It hits everything but what you want. No. Thank you. It's retesting finally the neckline resistance for the first time since it came up there. So I think we're going first to $50, which we made that call at $17.50. Then the next move is right here. And I believe $75 is first. Then you have to hit about $180 to $200 target, right? So you're hitting 50 was the first target. Then we run up to $75. Then the next target is $150 to $200. And I think that's possible by the end of next year. I think $75 for sure gets hit next year. And I think the $150 to $200 target could be hit as soon as the end of 2026. But I think for sure during 2027. But with what I think the monetary and fiscal policy and how bad they're going to manipulate the rates and increase the currency, the cap is being taken off. Governments around the world are remonetizing. The central banks around the world are remonetizing gold in silver bullion and they're selling dollars. They don't want them no more. And I think that's your next target. Then I believe by 2030, you could be looking at a $700 silver. And that's not pie in the sky numbers. That one's going to be a little bit harder to hit. But just as I knew the $50 would be hit at 1750, and it took 5 years, but we're about to hit it. I know 75 to 150 will be hit next year. At least 75. And then much, much higher after that, as they're going to drastically lower rates. I'm not a financial advisor. This is only what my own personal opinions are, and these are some of the miners. This is my portfolio. These are all the companies that I own, and they're doing very well. Our position as a whole is up 100% now, which is crazy. The Bitcoin price has had a nice recovery over the weekend. If we zoom in here, we can see, if we zoom into the hour time frame, you can see we bounced from just below the 100-day moving average and just above the 200-day. We've rifled something that we were speculating that could happen, to where now we're getting above the 50, and this could bring you all the way back up, as much as touching the back testing the major upper resistance now, the 3.5-year pattern, that rising channel, that it's having a hard time getting back into it. So that's what we're going to look. How far can this pump? And if it does pump all the way up into this upper resistance, does it get harshly rejected again, like it has the last 2 times, where it did it once, then it did it twice, right? Is this going to be number 3? Or is this going to lose steam south of that and just above, peaking our head above the 50, then it's going to lose steam and actually start trading back below and down. If it trades to the downside, obviously the 100 to 200-day moving average at 106, and then the 95,000 is your major underneath supports. As we do know, that's your 3.5-year pattern that we're trying to confirm an actual breakdown out of, which would be extremely bearish and extremely significant. Something else significant here is we bounced off the 100-day moving average like we thought we would, or that we could, and that was more likely in the short term. We came all the way up to the megaphone neckline resistance now, but got above it. So now it's going to try to hold it and confirm it as a major support after blowing above it to a new high, falling below it for the first time. And then if it can stay above it, back test it and hold it as support like this, and then gets above the 100-day moving average, that's 50-day moving average, it's very bullish. If it doesn't at some point this week and it fails it and falls it, your first major support is going to be a regional double bottom at the 100-day moving average. And then the next thing that you would pay attention and look for, if it ended up coming back here, would be coming all the way back down here to a major pattern support, which is the top part of this green support and resistance box that starts at 3482, just above the 3406 200-day moving average, right? And ends at the bottom at 3063. If we look at the price of XLM, it had a nice rally too. It bounced just above the 200-day moving average. Ferocious rally, got it all the way above the 36 cents, which was critical. And now we're trying to attack the 50-day moving average at 38 cents. And to get short-term bullish now, which you'd want to see, and maybe trying to form a regional double bottom where you have a bottom there and then a bottom there, right? As you get back above the 50-day moving average, you hold the 50-day moving average, and then you start to make a run at this 43 cents way up here, right? So that's what we're looking at on the bullish case in the short term. Oh my God. Is you get back above, you stay above the 100-day, you stay obviously above that 36 cents, get above the 50-day, and then run towards the 43 cents and try to flip that to support, right? The bearish scenario is you start to die out as you start to run up into this 50, and you end up back at the 36 cents and lose it at a regional double bottom of 34. And at that case, if you lost that, you would end up at the 31 cents, which is very close to the weekly time frame 30 cents moving average, right? The XRP price is the same thing. It's got the same similar bounce. It bounced just above its 200-day moving average and a critical $2.55. It is rifled above the 100-day moving average at 283, and it is sitting just below the 293 50-day. And the bullish scenario is the same as the XLM, excuse me. Got to get back on top of the 50, charge to the 307 and flip it back to major support. And then you're bullish and you can try to work your way towards regional highs at 338 right here, and then the cycle high at 366, right? The bearish scenario in the short term would be between this 307 and where you're at. You start to lose the price action, you slip down to the 200-day, you lose it, and you end up down at the 255. And then that would be a critical stop, because if you lost to 255, that's where you could look at a weekly time frame moving average hit down there at the 213 level in red down there, right? Like the channel, subscribe. I'll have a little altcoin update coming out right before I go back in off my lunchtime break. And before I let you go, I wanted to show you part of what our asset appreciation and how we're going to become asset millionaires. It's by the education and information that we know, by dollar devaluation, which makes assets appreciate, and dollar versus silver and gold, 1900 to 1925. A $1 bill is still worth $1 in face value, 0x growth. A 1 ounce silver coin was about 65 cents in 1900, is about $47 in 2025, a 72 times increase. A 1 ounce gold coin, 1 ounce gold coin grew, from about $20.67 an ounce in 1900 to $3,800 and change in 2025, 184 times itself. This shows how badly the US dollar has lost purchasing power. So it still says $1 on the face, but you can see it's lost 184 times its purchasing power in gold and 72 times its purchasing power in silver. And you can extrapolate that across all other commodities and consumer goods, housing, fuel, food, right? This shows how badly the US dollar has lost its purchasing power, while precious metals have preserved and multiplied value across 125 years. If you held $1 in cash since 1900, it buys less than $5 worth of 1900 goods, right? If you held 1 ounce of silver, it's now worth $47. If you held 1 ounce of gold, it's now worth $3,800. Obviously, you would have died during that time, but just showing you the purchasing power gold saves. So when you're young, whatever the price is, if you buy some gold and you hold it from, say, the age of 20 till retirement, it's actually a good retirement to hold your purchasing power, right? For retirement, you could use that gold as your retirement because it's held its purchasing power. You just sell a little bit of your gold when you need to buy stuff. So I think that's very powerful, and that's why we do the investing that I do and that I'm trying to educate you on, to get you involved in asset appreciating things in a chronic dollar depreciating world and becoming an asset millionaire, which really is just keeping you up with the standard of living to live a comfortable, what is a dead middle class lifestyle, right? Peace and love, the Rock's Eyebrow, Jay. Oh my God.